Hello everyone and welcome to Day Trader S&P 500. Today is September 5, 2024. This is Dale Woodson, editor of Woodson Wave Report. I've got some exciting stuff to tell you guys about today. I want to start with our auto trade triggers and targets that we just established a few days ago. All right, it's our system with Striker Security, so if you want to get involved in that, you just come over here to our webpage, hit the auto trade triggers and targets. It tells you everything that you need to know there, with contact info and all the important things. And I want to show you guys a little bit about that. Okay, we incorporated the triggers and targets algorithm into the auto trade. So instead of with the triggers and targets where we have potential gains, this will be actual gains, actual trades, actual stops, and hopefully not many actual losses. Okay, the developer is me, Dale Woodson. The trading system we're using is the triggers and targets. We're using the Fibonacci extensions and ratios, retracements guided by the Elliott waves. As you know, I put the Fibonacci numbers on first and then overlay the Elliott wave patterns. Money management strategy. I always say you always got a system. You always have to have a trading system. You have to have a money management system. We're using the Ryan Jones fixed ratio money management system. It limits our losses to 5% of the portfolio. Excuse me, it helps us build on our gains, okay? How it works, you open a futures trading account with Striker. They are a futures broker. Then they will auto trade my futures trades in your account. There's the contact info on Striker Securities. Okay, the phone number there, 800 number there, email address there for the contact there. And again, you can get that on the website by just clicking on auto trade triggers and targets and go that way there. There's contact info on that. Okay, without further ado, I want to get into, let's do Nvidia first, okay? Wanted to show you guys, we're looking at an hourly chart of Nvidia. You can see here the all-time high on June 20th at 141 and some change. We have either A or 1 down. There's two different ways to count that. The black is the C wave, and the the red is 1 down. They're both in red. A or 1 down, B or 2 up, C or 3 down. There's the target there. It's 80.74. If we get the 1.618, we're looking at 49.83. That would be a sizable decline, to say the least. It's trading at 106.65 right now. So the key will be to break this A or wave 1 low. Then there's our targets there. Okay, if it makes the 1.618, it's more than likely a third wave down than a C wave down. We'll see how that plays out, but wanted to touch base on Nvidia there. And I want to get to the SPX. Let's see here. We want to get to, here we go. We're looking at an hourly chart, and you can see there from the all-time high. This I'll show you guys with the table of the Fibonacci turn dates, but we started here. We got a, let me make that full scale there. So we got it down from the very beginning, the start on July 16th. First turn date marked a move up. It marked a low. The next one marked a high. The next one marked a low. The next one marked a high. The next one marked a low. Here we go. The next one marked a high. The next one is 9/9, which is Monday. It should mark a low. There's some very important information on here. I'll get to this in the charts, but this is the S&P hourly. Okay, you can see we got the 3 here, and there's the wave 4 targets, but we could count that as an ending diagonal. I'll show that on the futures too, where that would be, I may as well put it in there. Let me just copy and paste this for you guys. Let me do a little clone there. Okay, and we could make that a 4. Bear with me a second here. Okay, I think I have this on the futures, but I wanted to put it in here for you guys. and that would be a clone there, and turn that into a 5. There we go. And that could be an ending diagonal triangle up there. Okay, I think I got that. It looks better on the futures chart. But anyway, here's the wave 4 retracements. If that is the wave 3 high and not the wave 5 with the 4th wave diagonal triangle, which would be 1, 2, 3, 4, 5 right there. 1, 2, 3, 4, 5. Okay. Anyway, there's those wave 4 targets. There's a gap here below at 54.55. You can see it right over here. There's another gap over here, and there's the wave 1 high, excuse me, high of 53.30. This is the S&P cash index. Okay, that level is key. If that is broken to the downside, that means this move down is not a 4 correcting this wave 3. It's something more, because the low of 4 cannot go below the high of 1. And the next key level is the 8.5 August 5th low. I think I can show that a little better, but I wanted to show that too in the here we go, get into that September monthly. There it is. Here's the S&P cash hourly, same chart I just showed you guys. Okay, and there is the turn dates, and there is the time spiral there. To reiterate what we were going over, there's the next key date, and you can see it marked the low, alternating between low to high to low to high to low to high. Next target date should mark a low. Okay, so we'll see how that, and there's those numbers there. But I want to show you guys this on the ES, okay, because that's a little better. We'll get into this in a little bit. Let me go over to that ES, and let's skip over to here, because that's that same chart. And here I've got it a little bit more graphically explained here. Okay, there's that ending diagonal right here for 5. I mean, this thing bumped its head up here 4 or 5 times. Could call that a 3, that a 4, and that an ending diagonal. Okay, if so, then we've got a series of 1s and 2s with a 1 up, I'm sorry, a 1 down and a 2 up. Here's that key level, the wave 1 high in the E-mini futures of 53.59 and a quarter. If this move down goes below 53.59 and a quarter, again, that is correcting more than this wave 3 up. You can see this 2 down here to that 3 up, okay, because the low of 4 cannot go below the high of 1. And if it takes that out, the next target is to take out the 51.13 low. Then we've got a significant decline, and we're looking at the 55 days from the high, which historically can mark panic spike crash lows. We'll have to see that play out, but it's on the table. Let's put it that way. Okay, we've got 2 more trading days to that, so we'll need to see significant weakness again Friday, which will bring into that 4-day key reversal trade, which we want to talk about too. But I wanted to get you guys into these triggers and targets. Again, all these triggers and targets here are potential gains, potential, but if we do that triggers and targets with the auto trades, they'll be real. We'll have stop losses, we'll have actual trades. We won't get 100% of any move. We're always happy with 60 to 80% of it, but you can see we started this back in October of 2023, back here 1 trading day after that low, and the idea is to buy a contract on an upside trigger, add 1 with every trigger, and then you're adding on to your gains. And of course, the Ryan Jones money management system keeps us from big losses and blowing the account out. Okay, and here's the most recent one. We had an upside trigger on 8.13, and we had a downside trigger here that lasted a day. That's the only one on this chart that didn't last very long. It was 885 for a day, but you had to get out. And ideally on this one, you know, we don't have stops here. They're not realized gains, but when we do the auto trade, they will be. Okay, so here is that chart again. Again, this is very important to see what happens Friday if they take this out. Okay, obviously a move above these highs here, right under 56.70 would mean that that move is complete and we're going up to 5 to higher targets. Okay, so on Friday's jobs day, we're prepared for anything and everything. We have our upside and downside triggers and targets, if you will, okay, with our make or breaks and all that stuff. So we are ready for anything. And I want to get you guys to the midday report that we put out today. Here we go, September 5. Okay, I think this will show that on there. Again, triggers and targets, that we've incorporated that algorithm into our auto trades with Striker. There's the information again. Okay, you open a trading account with a futures trading account with Striker. They'll auto trade my trades for you in your account with them. Okay, that's the way that works. There's that contact information there. Okay. Oh, by the way, I'll be out about another 10 days from now for about 10 days, but I'll try to get some reports out during that time. Okay, so we ask ourselves, what if the market moves below the wave one high of 53.59 1/4? That's the futures. There's that 53.59 1/4. That is the key level that triggers a potential panic spike low on Monday the 9th, plus or minus 1 or 2 trading days. Okay, so that's the one that'll trigger everything, and then if that gets taken out to the low side, the next is the 51.13. Okay, again, we got our upside parameters right there, right under 56.70. So here's the verbiage on that. If that's broken to the downside, then the top is in at that 56.69 1/4 high. Then we look for it to take out that 51.13 low right here. Okay, and by the way, today taking out yesterday's low was a pretty big deal. Okay, if I get back to that chart, I might show you guys after that. But I wanted to get into this key reversal trade. It's a 4-day trade. Day one was the other day, yesterday. Today is you can see the futures open at 6 p.m. on 9/3. Okay, that was yesterday, and then on 9/4, here's the trade. Okay, market cannot see the previous high the previous day and place a stop above the wave one, the day one high. Market does not have to close lower. Then we'll move on to day 3. It's a 4-day pattern, trading pattern, and our monthly subscribers have all 4 days, and so far so good. We'll see how day 3 plays out on Friday, and that just starts tonight in the futures, and obviously tomorrow at the open, an hour after the jobs report. So we'll see how that plays out. Okay, so we got our parameters set, and there's that Fibonacci time spiral with the 9/9 turn date, which should mark a low with the alternating highs and lows. Okay, it could just mark the bottom of wave 4. If it starts breaking down these, breaking through these lower targets like the wave 1 high, then it brings into play the potential panic spike crash low 55 days after the all-time high. Okay, that's what we're looking at there. I wanted to show you guys the chart here. This is the most important right here with all of our parameters, upside and downside. Got that Fibonacci turn date. It's only 2 trading days away now, and it should mark a low. We'll see if that marks a wave 4 down here, or if it breaks through the wave 1 high and then breaks through the 51.13 low. Then we bring in all kinds of other combinations. First things first. Okay, that's it for today. Let me make sure we did Nvidia, didn't we? I think we did. Yeah, we did, so that's good. And then we've got the auto trades with Striker over there. All right, and we'll leave you guys with this here. We'll get another trigger here real shortly, and either an upside or a downside depending on what happens. But hopefully you guys are jumping in on that auto trade, because that's pretty excited about that. Okay, thank you, and until next time, take care everyone.